right, hello everybody. Today is the 11th of Feb and no trades for me today. I do want to talk about one big mistake. Um, Sometimes I still make, uh, but I found a solution to. I think it's one mistake I think can be solved permanently, but it's very tricky. And that is that pretty much for every trader, the biggest headache is getting involved in markets that are choppy or are churning or plateauing because that's when the market takes back everything it's given to you. Everything. You get a little bit overconfident, and just when you hit plateauing, boom, it hits. So I'm going to talk about three ways that you could potentially get yourself out of it, right? I use all three ways. One is kind of a prerequisite or a pre-solution. One is an in-session solution, and the other one is kind of a post-session solution. So let's talk about the pre-solution. Okay, the first one is just understanding the trend. So I'm looking at the NQ right now, and all I've done is just added a simple SMA. Okay, just a 21-year SMA, and this little line can actually tell you if the markets after 9:30 will be a little bit choppy. If the trend of price before 9:30, so the pre-market before 9:30 is choppy, then expect a high probability that after 9:30 it will remain choppy. If you have a nice clean trend before 9:30, then there's a higher probability that that trend is going to be clean as well, right? Doesn't mean it will be the same trend. The trend may reverse, but it's going to be clean. That is one way. Now, I do have a tool that I use. I think I've shown it in one of my videos that allows me to do this very quickly. I can see all time frames, I can see the trend, and I can quickly determine if there's trend alignment. All right. I can talk about that more specifically in a separate video, but I do this very quickly. But the reason I'm showing you the chart right now with the EMA is this is a manual way of doing this. And you just flip through the different time frames to see if there's alignment. Right? That is one way. The second way is just building it into your model. So I use a two-step model that has three steps. And the very first step requires me to find direction. That effectively, I won't say stops me, but prevents me 80, 90% of the time getting involved in a choppy or plateauing trade. Okay. So this is excluding the first one I gave, right? The trend. I always check the trend, by the way. I have a video that talks about my pre 9:30 checks. And one of the things I do is check the trend. So that's the second thing, right? If you have a model, you build it into the model to make sure you're not getting involved with just choppy prices. Now, of course, part of that is looking at the macro, looking at if there's any news or stuff like that, that can effectively either give you a trending day or non-trending day, right? I don't want to go too deep into it because it's not like too it's too heavy. The key is just making sure your model accounts for this choppiness. The third way is actually more sort of post analysis, right? Usually that's when something's failed. If you find yourself, so for example, I have a, a 10 SMA average, right? The SMA that tracks, it's always tracking my last 10 trades. And is cumulative, and all I'm doing is if my my trades fall below that moving average 10 SMA, if it falls below it, so I track it cumulatively, I do it manually, and if it if so if for instance let's say I get a loss, and then I check the SMA and my trades are below that. Once it falls below the SMA, I cannot trade anymore, right? Live. I can only trade demo. And what I do is I replicate my live account in my demo and I keep trading, but now I have to recover. So I keep recording all my trades as normal. And now I need my trades to get above that 10 SMA, right? When it gets back above the 10 SMA, then I go back to live trading. Okay, hopefully that made sense. So just to repeat, I track every trade, and then all I do is just create a simple graph with a 10, just a moving average, uh, 10 SMA. Okay, so it tracks cumulatively the last 10 trades. And you always want to be above that line, right? If you're above that line, yeah, you can keep trading, okay? And it ignores the number of losses you're making, etc. Right? It just looks at your performance against the SMA. So as long as your performance is above the SMA, then it's okay. Once your performance drops below that SMA, you do not touch your live account. Okay, this is where self-discipline comes in. You have to effectively ban yourself from live trading. You can keep trading, but only on demo or sim. And what you do is you replicate your account as it is, the same balance, everything's the same, and you keep trading, but you have to get back above the SMA. Right? So you keep recording it like it's live, but the reason you're doing this is because you can't go back to live. Sorry, go back to live until your performance has gone above that 10 SMA. And the only way you're going to do that is you keep doing that in your demo or your sim. And then once it's back, you can then go back to live. So hopefully that wasn't complicated. So it's a non-trading day for me. I just thought I'd do a sort of general video, but those are the three things. So the first is understanding the trend before market open. The second is actually building it into your model. And the third is a post-trade analysis. It's just looking back at what you've done. It's not looking specifically at losses. It's not looking specifically at wins. It's looking at your overall cumulative performance, tracking that against some kind of moving average, right? I use a 10 SMA. You can use whatever works for you, 13, 14, 15, whatever works for you. The whole point is you're tracking your performance against that moving average. And there's only one simple rule for you. If your performance drops below that moving average, you immediately stop trading live. You go to sim. The only way you can get back to live is for your sim to put you back above that moving average, right? If you want to see an example, I'll do a separate video on that. But all you're doing is just tracking your performance. Really, really simple. A simple Excel spreadsheet. You can do that. All right, guys. Hope you got something out of this video. It's a bit of a lazy day for me. I've got a couple of things I need to do. So I'll see you in the next video.